As the year draws to a close, it's helpful to reflect on what's been happening with equity markets, particularly in light of the more than 300-point fall that the US market experienced late last week. The falling oil price and concerns about deflation are the main cited reason for this volatility in the US. But it's helpful to see this in the context of what's happening in markets more broadly. Because as Australian investors, we often have a quite myopic approach, thinking of the US and Australia as the main places to invest. But there's been some very interesting movements in the Chinese market and some other emerging markets as well. So starting with China, its market's up over 35% for the year, but a lot of those gains have come very recently. In a 2-week period, the market was up over 20%. It's a market that's heavily dominated by mum and dad investors, and so I think there's a fair assumption that a lot of that is market speculation, particularly when you look at IPOs, which on average this year have traded at 40% higher than issue price. But there's some other reasons as well. There's an important new connection between the Hong Kong and Shanghai markets, which now means that foreigners are able to effectively purchase mainland stocks, which they haven't been able to do before, albeit with some restrictions. The other important thing about China is it's a very energy consumptive economy. So a sustained low oil price is very positive. Interestingly, notwithstanding these big gains recently, when you look at valuations, China still lags other developed economies. So when you look at forward estimates of earnings, the Chinese economy, the Chinese market is trading at about 10 times expected earnings for next year, as compared to about 15 times for the MSCI index. And when you look at it based on trailing earnings, it's still only trading at about 14 times, which is a significant discount to what it's traded at in history. But it's not just China that's interesting. Indonesia's market is up more than 20% this year, and India's market's up more than 30%. These emerging economies, which are very dependent on external suppliers of energy sources, will be net beneficiaries of a low oil price. And in fact, interestingly, some commentators are talking about a low oil price adding 0.5 to 1% to global GDP going forward. I think in 2015 we're likely to see continued volatility, but as we see markets move around, particularly if we see heavy sell-offs, there might well be really compelling buying opportunities. On your behalf, we'll be monitoring those and bringing them to your attention, but I think we're in for interesting times. Have a good day.